Hello, good day and good time. I hope you're doing great. I'm here with you for the daily analysis of the USDJPY currency pair on February 23rd. As you can see, last week this currency pair...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Had a positive week and closed with a bullish candle, gaining more than 1.5%. At the start of this week, following the U.S. Supreme Court's ruling against the Trump administration's tariffs, we witnessed a sharp weakening of the dollar and a drop in this currency pair. This decline continued down to the daily BPR zone, after which the price rebounded upwards. Currently, the price is fluctuating between its two daily BPR zones. We are currently analyzing the currency strength chart over the past week. Over the past week, the U.S. dollar was among the strongest currencies in the market, while the Japanese yen was one of the weakest. However, today, as the first trading day, we can see that following the release of news regarding tariffs, the dollar has become one of the weakest currencies in the market, whereas the yen is trading with more strength compared to the dollar. This difference in strength has diminished in the past hour. Let's review the economic calendar for this currency pair. We can see that today and tomorrow there will be no economic data for the Japanese yen, and the news released for the US dollar will not have a very strong impact. As the most important impactful news on Friday, we will have the PPI report for the US dollar. We are currently analyzing the dollar index. We can see that its strength began to decline immediately after the news about the Supreme Court of the United States overturning the imposed tariffs was released, and after a significant drop, it is now in a corrective phase. In line with this index, the USD-JPY currency pair reacted to the 4-hour FVG zone at the price of 155.64, showed a reaction, and started to decline. This decline continued down to the 50% line of the 4-hour FVG and the price of $154, and now we can also observe a corrective phase in this currency pair. However, given the current news, we still expect this currency pair to decline for now. But at the same time, we should keep in mind that there is a risk of escalating geopolitical tensions and the possibility of a U.S. attack on Iran, which, if it happens, could strengthen the dollar and cause this currency pair to move upward. So, taking into account everything that has been discussed, we can monitor the charts for a downward stop and go for a sell. But if we receive news about rising geopolitical tensions, we should immediately exit the trade to manage risk. Looking closely at the current 1-hour time frame, we can clearly observe that after the price action established a significant lower low compared to its previous bottoms, the market has successfully bounced back from this specific support area and has now completely filled the entire 1-hour FVG zone. If in the upcoming candles we see liquidity being collected and the daily high being swept, we can enter a sell trade and target the previous low as well as the 4-hour and 1-hour FVG at the price of $154. Wishing you success and profitable trades!